dear investors, we are delighted to announce the launch of our latest fund offering, Invesco India Manufacturing Fund. The fund will open for subscription from 25th July 2024 till 8th August 2024. India is one of the fastest growing economies in the world, and we are expected to become 2.5x of the current size over the next decade. We believe that India manufacturing sector will play a very important role in terms of being a key catalyst as well as beneficiary of high growth phase. As a result, we expect that manufacturing component of GDP will grow faster and become 3.5x of the current size over the next decade. This will create opportunities for companies in the manufacturing sector, helping them to grow faster than India's nominal GDP growth rate. We believe that conditions are in place for India to become a preferred manufacturing destination. Today, manufacturing sector in India has access to one of the largest and fastest growing consumer markets in the world. The sector has scope to build competitive advantages in the form of access to large and low cost pool of labor, easy access to capital, both equity and debt. The sector also enjoys strong government support as measures have been taken to address viability by introducing PLI schemes, improve productivity by higher spending in infra, and enhance total addressable market by signing free trade agreements. Over the last few years, India is already one of the biggest beneficiaries of shifting global supply chains. Import substitution is a very large theme within manufacturing space. India has already demonstrated early success in electronic and defense manufacturing. In fact, in mobile phones, what started as an import substitution is now a key driver for merchandise goods exports. Hence, we believe that considering all the above investment arguments, manufacturing as a theme can do well over the coming years. Having understood the strong investment arguments for manufacturing, let's now understand how Invesco India Manufacturing Fund is expected to be positioned. Our eligible universe starts with 269 categorized companies. As a process-oriented house, fund managers at Invesco can invest in a company only after it is categorized by our analyst team. Out of the above universe of categorized companies, 146 companies use plant and machinery as a tool to generate business and are eligible for this fund. We have divided these 146 companies into traditional sectors such as auto internal combustion engine, pharma, textile, capital goods, consumer durables, and new age sectors such as auto EV, battery, semiconductors, defense, electronics, renewables, etc. Amongst the above sectors, we will prefer three types of companies for our fund. First type of companies that we are going to prefer are companies who are globally competitive. These are companies who have large global operations and have demonstrated track record of gaining global market share. Second type of companies that we would prefer are companies with strong technological prowess. And third type of companies that fund would prefer are companies or sectors that have tailwinds and are expected to grow fast either on account of import substitution or shift of market share from unorganized to organized. Overall, we will create a diversified portfolio of around 50 to 60 companies which fit the theme and offer attractive risk reward from long-term perspective. We thank you for your patience and look forward to your participation.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.